What's up, guys? Welcome back to DCA. Today what we're going to do is take a look at Bitcoin's price history, and we're going to look at the critical level of support that we're sitting at right now. And I'm going to show you why this level is so incredibly important. And when we've dropped below this level, it's led to absolutely devastating results in the cryptocurrency asset class. If you're new to this channel, we only deal with the facts. So I'm going to show you the data. You can make up your mind what it means, but I'm going to lay out a clear presentation as to where we're at right now, and if we drop below this level, what that could potentially mean based on historical trends. Okay. So we've said many times in the past, when Bitcoin goes below its 20-week moving average, typically it needs at least several months to recover. Okay. So this is kind of old news at this point, but I'll just quickly go over it. We fell below here 2 weeks ago, approximately. We fell below in May. You remember what happened in May. Other times where we've fallen below are at the end of the 2017 market cycle. We fell below at the end of 2019 and then took about a year to recover. Okay. We've also fallen below at the end of the 2013, beginning of 2014 market cycle. So typically going below the 20-week is, in general, a bearish sign. It doesn't mean just because you're below that the market cycle is definitively over. All right. We went below in May and we were able to get back, and we came back to this level to get back to $69,000. So now we're going to look at the next natural level, and that's the 50-week moving average. So the 50-week moving average is actually interesting because, as you can see, we've been holding this 50-week moving average. So if you sort of bring the 20-week moving average down, then you get the 50-week, and you can see we've been holding it as a level of support during this latter stage of this bull market. So when we came below in May, when we had this massive drop in May, we actually came all the way down to the 50-week. So we were right at the 50-week. We held it as support, and then we continued the bull run. So we came back down. We got very close to it the week of September 20th. We got very close, bounced off, and now we are sitting right at the 50-week moving average again. So let's just quickly go back in the past and see what happens with Bitcoin when we go below the 50-week moving average. We'll just start at the end of the 2014 market cycle. And I assure you, this may sound boring. I'm sure you're like, bro, I'm trying to learn about the altcoins right now. I'm trying to figure out what's going to 20x. Well, let me just tell you, you need to know this first, because if this goes below the 50-week, I'm going to illustrate to you why right now nothing's going 20x. All right. So back in 2014, right after we hit this second peak in this double peak cycle, you can see here's the middle of 2013. Here's the latter stage of 2013, right at the end of the bull market. We start to come down. We try to hold the 50-week moving average as support and are, however, unable to. We fall below, all right? We fall below the 50-week. And from the week that we got below, we got down as far as 74% in fairly short order. And in fact, to get back to our prior all-time high, it took Bitcoin approximately, we didn't actually get above until about 1,200 days later. All right. So just a massive, long, extended bear market going below this 50-week. All right. Then in 2018, we saw a similar thing occur. We hit our peak at the end of the market cycle. We came down to the 50-week moving average, attempted to hold it as support, and were unfortunately unable to do so. And then we dropped below. And, we can do the same type of thing here. So from the point where we dropped below, so the week that we got below, we went down in just several months, 63%. Again, we can see how long it took to get back to our prior all-time high. Obviously, this is this market cycle, so everyone kind of knows the story of that, but it took about 1,100 days. So the first time that we fell below, it took us 1,200 days. The second time we fell below, it took us 1,100 days to get back to our prior all-time high. Then we have sort of an odd example. This is an outlier because of the fact that even if you go over to the NASDAQ or the S&P, we went below the 50 week, but rapidly got back above the 50 week. And in fact, if you go look at the, NASDAQ index market, for instance, it went below its 50-week moving average during the same time and rapidly got back above. That is highly, highly irregular. That does not typically happen. You can go back and look at the history when you have a significant close, greater, and we're not talking about these 1% within the 50-week moving average closes below. We're talking if you have like a 5% or more below on the NASDAQ. When you have a significant close below the 50-week moving average, it typically takes at least 6 months or more to get back above. But with COVID, we all know what happened. The money printing, there was a massive influx of, investments into the market because of all the money printing. And we were able to quickly get back above and get back to basically our prior all-time high several months later. So this is sort of an outlier event. Now, it brings us to right now. We have been bouncing off the 50-week moving average on the move up, right? So, you kind of saw this back in 2017, although really back then, Bitcoin was bouncing off of its 20-week moving average rather than where it's bouncing off of its 50-week moving average. Okay. Okay. So the bottom line is this. In the past, when we have gone below the 50-week moving average, when we have had a close below the 50-week, you may be asking then, where is the level of support where we have gone in the past? Okay, so, and as I always say, back up whatever you say with data, or else it's just an opinion. So we went below here on 8/11/2014, or the week of 8/11/2014, and we went all the way down to the 200-week moving average. That is where we hit our level of support. Then in 2018, we broke below the 50-week, and we could just see how many days it took. So from the time that we got below, which was this week right here of 5/21/2018, it took us approximately 200 days of just a slow bleed down to the 200-week moving average where we held as support. All right. Then again, in March of 2020, during the COVID capitulation event, where did we hold our support level at? Yeah, the 200-week moving average. All right. We had our closes occur right at the level of the 200-week moving average. Now, this isn't popular to say what I'm about to say, and no one wants to hear it, and no one believes it, and no one thinks it can happen. But at the end of the day, we have to ask ourselves, where is the 200-week moving average right now? Okay, and you're not going to like the answer. The 200-week is right at $18,423. Now, with that said, do I think that we're going to the 200-week moving average right now? No, I don't. But there's two things at play here. First of all, the 200-week moving average is rising and will continue to rise, even if we did get below the 50-week moving average right now. Second, typically in normal circumstances, when we do go below this 50-week, we don't just go straight down to the 200-week moving average. It takes some time to get down there. So, for instance, even back here, when the market was significantly smaller, it still took us over a year to get there. That is going to be your bearish scenario. And like I always say, no one wants to hear the bearish scenario, but if you're serious about investing, you need to know what your downside risk is. You need to know what your downside risk is. You need to know what the potential that we could be looking at. And the fact of the matter is, we are below the 50-week moving average right at this second. So the price of Bitcoin at this moment in time is $47,150. The 50-week moving average is at 47,700. Obviously, we're talking about weekly closes, and as I've said, if we closed right here, I don't think that would be significant. it's going to take, if you start seeing closes going 5 or 10% below it, that's when you need to start worrying. Okay. So that is your bearish scenario. Now, the bullish scenario, on the other hand, and I think there's a couple ways to look at it. As the market is evolving, as the market is maturing, the what used to be the 20-week moving average, and holding that as support during market cycles, well, that could potentially be shifting over to the 50-week moving average as the market matures. I'm not saying that's necessarily the case, but the potential exists that it is the case. So it's something we can at least watch for. And if that's true, maybe we hit this level, perhaps go slightly below it, but not significantly below it, and then are able to bounce from here. So, you know, personally, when we talk about market cycles, the 4-year cycle, lengthening cycles, etc., I buy into lengthening cycles for the fact that as a market matures, it's just likely that the market cycles start to just become blended in with one another. And you start to lose these massive boom and bust type periods that, we've experienced in the past. With that said, I don't think we're quite there yet. The whole reason for the 4-year cycle is that the miners essentially are the dominant sell pressure on the market. But at the end of the day, the miners aren't the dominant sell pressure anymore. It's the exchanges now. So the exchanges have supplanted what used to be the dominant sell pressure in the market, which was the miners. Okay. You have this dynamic shift. You have the market maturing. You have products like futures coming on, ETFs coming in, just the spectrum of types of investors is changing. You have institutions getting into the market now. The world of crypto is changing, so we need to start broadening the horizon of our analysis. We can't just use only, what we've used in the past. However, with that said, this type of analysis, looking at the 50-week moving average, is not relegated just to cryptocurrency. It also applies to the broader markets, and you can go look at those if you want, and you can just put up the 50-week moving average or the 20-week moving average, and you can see how this type of support level even exists for those. When the NASDAQ has a close below the 50-week, and like I said, we're not talking about 1 or 2%, we're talking about something like 5% below, it typically takes at least a half a year, if not much longer, in order to get back to whatever the prior local high was, right? So this is what you guys need to watch out for. I'm not saying that I think the market cycle is over. At the end of the day, I don't know, and no one knows. And anyone telling you that they know is full of it, is the bottom line. And that's just a fact. No one knows whether this market cycle is over. So all we can do is look at the data, analyze the data objectively, and try to, as best we can, remove our emotions from the picture. So if you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.